This might be the craziest story of the year. Leopold's fund just got fully liquidated, forced to sell its entire public stock portfolio right before his wedding this weekend. But this was no accident. Let me explain. He's a 24-year-old who left OpenAI, wrote a 165-page essay about AI infrastructure, then turned it into a hedge fund, growing it from 225 million to 45 billion in under 2 years. His biggest holdings include SanDisk, Iron, CoreWeave, Intel, Bloom Energy, and many other AI names. But there was one big problem. He was using 4x leverage to boost his returns. So when his core holdings like SanDisk fell 40% the past month, things started to get ugly. Then he told investors this may be a good time to add funds, signaling he views the sell-off as a buying opportunity. This is where things got really crazy. Citadel suggested that the Fed might deliver a surprise rate hike, and this is what crashed the markets even more. Everyone knew a rate hike was very unlikely, even Citadel. So why did they say that? Well, nobody knows for sure. But because the market was down so much, Leopold was sitting on major losses and got margin called, forced to sell his positions. And guess who just swooped in to buy the fund for pennies on the dollar? You guessed it. Citadel. The same company whose comments caused the sell-off. And then those AI and semiconductor stocks rebounded hard today, making Citadel billions of dollars. This is some next level 4D chess. I actually feel terrible for this guy. Apparently, he's getting married this weekend, and he actually made some incredible stock calls until this point. But this is the biggest lesson. Even the smartest investors can get completely wiped out by using too much leverage. As famous investor Charlie Munger once said, there's only 3 ways a smart person can go broke: liquor, ladies, and leverage. Follow for more.